What's up, everybody? This is Chris Craddock, your real estate coach, and I am here today to talk with you about how we should look to purchase properties. If you're doing wholesaling, if you're doing fix and flipping, those are all great, but those are all transaction-based stuff. How do we move from transaction, where we're getting paid a good amount per deal, to wealth, where we get the coveted MRR, monthly recurring revenue, which means money comes in every month. Whether you're out working for it or not, it comes in. Listen up, hit like and subscribe, and we're gonna help you go from 0 to 7 figures. Bam! Okay, so here is the deal. We need to look at equity or cash flow. What do I mean by that? If you're in a world in which you need to create cash flow, where you need money coming in, you don't have a business that is kicking out cash, then we need to figure out how can we get rental properties for you that cash flow well, anywhere from $200 to $1,500 a month, right? Because just think about how you reverse engineer your life. If you need $100,000 a year, we need to get to $8,000 a month coming in. If you need to get to $500,000 a year, what do we need to do? We just reverse engineer our life so that we can think through what do we need to do to get there. Now, maybe you have other businesses where you don't need the cash. And at that point, you want to grow your net worth. And I believe that that is more powerful. Listen up and I'll explain why. So equity is so powerful for this reason. If you grow your equity, you can take the money out. It's called a non-taxable event, right? Or unrealized gains. So if you take out $100,000 in a refinance, all of that money is tax-free. But if you leave all that money in your property and you're getting it out in cash flow every month, you're paying anywhere from 25 cents on every dollar to 50 cents on every dollar to the government for the rental income you're bringing in. So my take is this: you need to bring in enough cash flow to live your life, and the rest of everything you just want to put into equity and building your net worth. I'm going to explain some more reasons why that is more powerful. Here's another reason why equity and net worth is so much more important than cash flow. Let's say you go to Indiana and you buy a property for $50,000 and every single month it cash flows $500. Okay, that's great. You've got $500 there. It's going to cash flow like crazy. Awesome. Here's the other side of that. One, you're paying taxes on it, but two, if you buy a $500,000 property that cash flows maybe $1,000, one, every single month your mortgage payment, your principal pay down is a much higher number, so you are paying off with your renters paying it off for you. You are paying off your principal note. So every month your net worth is getting bigger and bigger and bigger by massive chunks, right? At a $500,000 property, you're paying off, let's say $500 a month. At a $50,000 property, you're paying off what, like $50 a month? $30 a month? Just a small amount that your net worth is going up. But then here is the real kicker, right? Let's say the market goes up 10%. Your $50,000 property, what does that go up, right? Not much, not much at all, $5,000. The market goes up 10%, your $500,000 property, how much does that go up? $50,000, right? You make more on that property in 1 year of going up 10% than you do in 10 years of the other property, right? So that's the key right there, is how do we grow our net worth? And then if your net worth, the larger your net worth is, every year as it grows, you've got just a bigger pie that's growing bigger and bigger and bigger. And that's the key. I'll tell you, if you understand what compound interest is, it's getting that snowball rolling. We've all made a snowman before, right? Start that snowball rolling. It may start small, but the bigger it gets so much bigger, so much faster. That is why we need to focus on our net worth and growing our equity rather than just growing our cash flow. So let me say this. If you got a bunch of paid off properties, I would say this: take out 50% minimum 50% of what you have, refinance that money out, and go buy something else with that so that you are not just cash flowing, unless you need all of that cash flow to live your life. But if you have any extra money, take that money out, go buy another property, and just think about it. Every time you buy a new property, 1, you're getting new appreciation. 2, you're getting new cash flow. 3, you're getting new depreciation tax savings. And 4, you're getting new principal pay down, so somebody else is paying off another property for you. That is how you grow your net worth and go from like a small little ball getting a little bit bigger to a massive ball getting a lot bigger. So go out, get it done, live uncommon, like and subscribe. Let's go to 7 figures. Bam!